Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up's for Monday, a cold Monday in Chicago. We're going to be in a single digit, they're saying, but it is cold here. And this is the 6th of December, 2021, about 7:05 p.m. A strong Monday to the upside. So the question is, does that lead to, by the end of the day tomorrow, a pullback in the market? That's often the case. When you get a very strong Monday, you give some of that up. Now, you are getting follow-through early on tonight, and I think you see that. All the stock indices are higher, so that's the first impressive thing. You're even up in the gold and the silver markets. Copper down a little bit, but it's running into that 18-day average of resistance. I covered that earlier. And we still are 73 cents now, $73, I'm sorry, I wish it was cents, $73 a barrel for the Brent, so the market has certainly come back, and the Saudis have to be doing this. Yay, I'm happy. We had an F1 that was successful, and it looks as though we're calling the Brent situation successful. Bonds and notes fairly flat. So as we take a look at the marketplace, again, the market so far has not been able to get back under for any lengthy period of time. Frankly, since last June, this is a year ago, June. This is 2020 that I'm pointing at, not 2021. You can see that. So this pullback, each and every time, you have to recognize it for what it is. Often the market gives you a pullback, and then it seems to come back and able to make a new high. Will Santa Claus be in that? Well, don't know. The market's been in a correction. You can almost see the correction, a peak, another peak. You can see, and you're coming up here, will that be a peak? When you put the swing line on, you get to see what the trend is. Now, here's what the swing line does. For those of you new to our videos, on a swing line, you are looking at the current day and drawing the line either to the day's high or low, depending on whether the prior day or the prior bar, if you're on a 10-minute chart, a 5-minute, whatever it is, you can run this on anything. Did you have a lower low day, a higher high day, an inside trading day, an outside day up, or an outside day down, or an outside bar? Just replace the word bar for that day. Got it? So in this case, you have lower highs, lower lows. Most chartists will tell you that is the definition of a downtrend. Obviously, the risk associated, if one were to go short right where the price is now at 45.97, you'd have to have a stop all the way up here. You have to put monetary risks on these markets because that's way too much money, in my opinion, to risk. Where's the most likely resistance? It's probably the 18-day average of closes. Markets like a midpoint, a point of debarkation so that they can say, well, if you get over that number, I'm bullish, get under it, I'm bearish. And that's what it is. So in this particular case, you have the trend down, and I'll call it the bias. As long as the market's under the 18-day average, the bias is down. And when the bias is down, if the market rallies, you're looking for resistance at 46.37. I still don't like the idea of being short on a monetary basis because your stop would have to be over the 4700 level. That's an awful big risk. When we take a look next at the Bollinger Bands, Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. When a market falls down, you can get what some of you understand, what I call the gorilla glue trade. And that's because, you know, that glue's so strong for the average person. Well, the market hit it every day. It's starting to break away from it. We'll see if it wants to return. The odds favor the market's going to try to go up here. Why? I want to take you back to Friday. You have an outside day down. What is an outside day? It means you took out Thursday's high and low, and today you got up over that high. When that occurs, it's normally a trap for those that got bearish. And until the market gets back under that low, you look, at least I teach this, I look to see if the market can either get to the closest of a Bollinger Band or key moving average. The key moving average in this case is that 18-day average, let's call it the 46.39.5 zone. So I wouldn't be surprised if it tries to make a run for that area. Last, the momentum is turning up out of an oversold condition. So it is not bullish. It's still in a downtrend with the odds favoring a run to the 18-day average of closes. That's all that I can tell you on it as the market corrects an oversold condition. As we get to the NASDAQ, first thing, it too has been running the lower Bollinger Band. It's oversold in a downtrend, resistance 16,167.40, but to get up to that number means you've got to take out the last high of 16,121. That would break the downtrend. Oversold conditions, well, you attract more selling. It's not often. The Dow is making its run right here, right now, and I feel that it's done its job. Let me explain this to you. Here is a market that's got, follow the pattern, making its move right through there. So we had on Friday, the market didn't make an outside day down. It started an up. Today, the market had a lot of pizzazz to the upside. Where's it typically going to go then? To the 18-day average if the 100 didn't stop it, and that's about where you're at. So this is the area where I think the resistance comes into the market, and unlike the other index, this is not an oversold market. So this is still a downtrend, and I think the big boys are probably waiting to hit that market. Couple that with the fact of a big Monday, and often you're down on a Tuesday, they'll be looking at their work. The Russell, be careful here. The Russell had an outside day down on Friday. It was unable today, like the S&P, to take out that day's high. It can do it today, Tuesday's trade, and if it does, I think you'll be into then the combination of the 100-day average, excuse me, 2256 to the 2250.75 level or 70 level. At the 200-day average, and you're losing the embedded reading. Now, you haven't lost it. You can afford to lose it back and forth on the day that, like today, because yesterday the market, and that's Monday's action, you still had both numbers under 20. On a close over, that's the key. A close over 21. No, I think you got to be out of the market, and I think it's telling you it wants to go right into those numbers. So momentum is being lost on the downside. Defend yourself. That would be the thing I tell you. In the VIX cash, if the market gets underneath 25.89, the odds favor it wants to pull back. Maybe it goes back to the 18-day average and the combination here. One of the things that I started talking about to my subscribers over the weekend is I'm wondering with this most recent rally if we're not saying maybe it's time to say goodbye to getting as low as 15 again, and the new numbers for support might be the 18 to 21 level on the VIX. I can't answer that yet, but it's in my thought pattern. In the bond market, you're overbought. You got up to the upper Bollinger Band these past 4 days, 5 days almost. Nah, I think the pros are liquidating longs, positioning themselves to see if they can get a decline in the market. I think the same thing here. Even though you're in an uptrend, you're terribly overbought. You've hit all your upside targets in the Bollinger Band. Often you get a pullback from there. Next thing I look at is the dollar index. Should the dollar index get up and over 96.44.5, you break this downtrend pattern of lower highs and a lower low. You'd actually set up higher low, higher high, momentum flattened out. You've corrected an overbought condition. Are you talking the 9,700 level again? That's got to, my eyes will pop on that. The eurocurrency is the flip-flop. Was this the bear market rally that wants to end? The market's no longer oversold. You've rallied, unable to take out key numbers to the upside, that 18-day average. It's not a sell, but it's certainly not a buy. That's my opinion, at least. In the British pound, the trend is still down in a very oversold condition, very difficult. Now, we have the Bank of England, the Fed, and the European Central Bank all with monetary policies next week. I think this week we get the RBA's coming out, the Reserve Bank of Australia. In the Bitcoin, I was watching everybody today talking crash, and when you went down to that Bollinger Band, I was thinking to myself today, I'll bet you that's a trap area for so many people. They're going to bail in there. They're going to go, I can't stand this anymore, but you're at a 100-day average in the lower Bollinger Band, and you are coming with a bit of a bounce tonight to see, was that the game? Ether had a good first day, not like a Bitcoin. I didn't see the volume there the way that the Bitcoin, and these are these macros. These are really 1/10 size contracts. People seem to love them, and they'll be trading the heck out of it. Brent, February versus WTI February oil seems to be having resistance here in the 375 area, but it still favors Brent over WTI. Momentum up. As I said, you had hit the lower Bollinger Bands and you were running them. Now that you crossed this high, right through here, once you cross that, this whole play to the downside that really started back up right here, I think it ended. Now, that doesn't mean you instantly go from bear to bull. To get a bit of a chop in here would be very, very typical. But I do think until you take out this 65.77, there's got to be some other event to make that happen. You look to me like you wore that stay out. Same thing is true from my thinking on WTI now that you've crossed that number. First time you've done it, you've broken the Gorilla Glue trade. You actually started breaking it last week right here on Friday, and all you had to do is take this out, and I don't think you're going to hit that again so fast. So that's what I'm seeing there. And the Johnny-come-lately seemed to be the heating oil, which I think is now in a short covering spiral that might end up with the market challenging the upper 100-day average and the 18-day average of closes. Not the place that if you were sitting next to me that I tell you want to be pressing the short side, but nat gas isn't done. When it ends, it ends. You don't pick a bottom. This has been a major, major washout. Cold weather's not impacting it that much. It has just taken itself from up here. Just think of this price that it's got. It was over $6. Yeah. And where are you now? $3.63. This market has almost dropped 40% in value. What the heck? That's quite a big drop. And once you had the crossover, that did the market in right there. Watch this. Game over. And they just annihilate the traders. There's a lot of moving average traders that look at patterns like that and they go, uh-oh, something else is happening. I talk about this and so much more in my morning futures videos. So if you haven't seen it, you should take a look. In it, I start you off at about 5:40 in the morning. I start recording. I've already reviewed everything in the way of news that I've seen of importance in Asia, Europe, the U.S., what reports are coming out. I'm giving you right then what the markets are looking for in the analyst estimates, which way it might go, where we're thinking about it, and then I start giving you the trade ideas from there. The video will play in our app or your own app. You know, you can go to our website and watch it. The news, I think you'll find that breaking news is so important in the morning, and I'm going to cover 40 charts with a lot more studies than you see here. Way more, and I've got a different personality. I'm the Hyde personality there. Buy here, sell there. This is what I want you to do here. Well, this is what I think the pros are doing in the market, blah, blah, blah. How do you get to it? $7.95 for the first 30 days. 24 videos every 30 days. How do you beat it? It's not a monthly basis. It's on a daily. So whatever day of the month you start, you get 30 days from there, and away you go. After that, you can decide you want to go to a yearly, do you want to go to a monthly, stay with that bit higher price, or you quit. Your choice. How do you do this? Just go to our website. Under the word research, it's there. I had some people ask, Ira, what about combos where you put out your video, your morning futures video and the spider? Can I get a combo package? The answer is it's always been there. We had a computer glitch. We didn't realize it when we were doing this special. It's back up. So when you go in research, you'll see that there as well. In the meantime, I'm Ira Epstein. You have a great day.